All right, today we're jumping into a really interesting analysis, one that presents this huge paradox about Bitcoin's performance lately. Because on the surface, yeah, things look kind of boring, maybe even stagnant, but the source material we're breaking down argues that this is actually one of the most bullish signals you could possibly ask for.
So let's get right into it. How on earth can a negative 9% return be a good thing? It feels wrong, right? The source starts with this jarring fact. Bitcoin has basically had a flat, slightly down year. And for anyone used to its crazy growth, that feels, well, pretty disappointing. But the whole argument we're going to explore is that this quiet period is actually a massive sign of strength.
So this is the number that has a lot of people worried, or maybe just bored. But to really get the bullish case here, the source says we have to completely change our perspective on what growth and maturity even look like for a brand new asset class. Let's dig into how they make that case.
Okay, so how can this stagnation possibly be a positive? Well, the analysis suggests we should look at this as a totally necessary period of maturation. Think about it like a kid learning to walk. Their journey is going to involve some wobbles, some volatility, and yeah, some periods of just sitting down and resting. It's all a natural part of growing up and getting stronger.
And the source really doubles down on this analogy. I mean, kids get bruises and scrapes while they're growing up. They have to. Without those experiences, they just can't develop. And in the very same way, an asset like Bitcoin needs these quiet phases, these periods of consolidation, to build a much stronger foundation for whatever growth comes next.
So let's see how this idea builds. The key, according to the source, is to just stop staring at the daily or yearly chart. We got to zoom out, like all the way out, to its entire 16-year history. Because that is where the real story is.
When you look at it over its whole lifespan, the source points to this just incredible number. Bitcoin has a compounded annual growth rate of 121%. That makes it the best performing asset in the entire world in 12 of the last 16 years. Suddenly, a single flat year doesn't seem like such a big deal, does it?
And this chart just puts it all into perspective. Wow. The source contrasts Bitcoin's performance with those traditional safe haven assets. Gold has delivered these steady but pretty low returns, and silver has barely even kept up. It's clear Bitcoin is playing a completely different game.
The analysis brings up this quote to make a really crucial point. Bitcoin's entire value proposition is its high-growth, risk-on nature. Basically, investors are willing to take on higher risk for the chance of much higher returns. If it was slow and stable and boring like gold, it never would have grabbed the world's attention. That volatility? It's a feature, not a bug.
So if the price is flat, who in the world is buying? This is where the story gets really interesting. The source argues that the most important thing happening this year isn't the price at all. It's the fundamental change in who the typical buyer has become.
What we're seeing is this massive handoff. The narrative has totally shifted from short-term speculators who are just trying to chase momentum to huge institutions and what the source calls smart money making long-term strategic decisions. This is a profound change in who actually owns this asset.
And the evidence for this is everywhere. The source points to these record-shattering inflows into the new ETFs. You've got vocal support from major political figures, and big corporations are adding Bitcoin right onto their balance sheets. These are all signs of quiet, determined accumulation by the big players, totally regardless of the flat price.
Okay, so all of this institutional buying, it's leading up to something. It leads us directly to the source's bold, forward-looking thesis, which all centers on the year 2026 and a massive economic shift that it predicts is just around the corner.
First up, think about this from a geopolitical angle. The argument is that the U.S. has a huge strategic incentive to champion a new asset where it already has a head start. Propping up gold just doesn't do that, because competitors are just as strong. The source argues that by embracing Bitcoin, the U.S. can actually secure a leadership position in a whole new financial world.
So this sets the stage for predicted timeline. 2025 is the year of quiet accumulation. Then, in May 2026, there's an expected change in leadership at the Federal Reserve. After that, the source believes inflation is going to become the #1 economic story, forcing this massive reallocation of capital.
And here's what that shift could actually look like. The source predicts something called a great capital rotation. We're talking trillions of dollars being forced to look for a new home, fleeing from underperforming assets like bonds and increasingly unaffordable real estate, and moving into something totally new. And this rotation, the source concludes, is the final step in Bitcoin's evolution. It's the moment it moves from just being a speculative trade to becoming a core treasury asset for both regular people and major institutions.
This quote from Michael Saylor, which is highlighted in the source material, it just perfectly captures the mindset of this new wave of long-term holders. They are not looking at the asset for its price today. They're looking at its potential as a superior store of value, an asset that's designed to hold its purchasing power over a very long time, far, far into the future.
So you can really see the journey here, right? It's framed as this clear three-step evolution. It's a path that's being driven by a community with this deep conviction that goes way beyond just watching the daily price swings. And this brings us to the crucial point of the whole analysis.
At the end of the day, this analysis presents Bitcoin's flat year not as a failure, but as the quiet, necessary foundation being laid right before the next major economic chapter unfolds. It's a period of maturation, accumulation, and a fundamental shift in thinking.
And that's really the provocative question this analysis leaves us with. As the world starts searching for a new store of value, where will trillions and trillions of dollars find their new home? Thanks for joining me for this explainer.